Once you go in here and you start a return, it'll ask you um, you see the different menus up here where you can import information from last year. So if you have a old return or what have you, you could import your personal data instead of putting all that in there. It also asks you once you go forward here if you want to import data from financial software. Yes or no. I click no in this one. Then it asks for your basic info before you start. They wanted to know if you have last year's return, your social security number, need your birth date, the social security numbers, family's health insurance. Then it asks you what your filing status is. There's 5 filing statuses. Are you married? Are you single? Are you married, filing joint, separate, head of household, or qualifying surviving spouse? I'm not going to get into the details of those, but there's a button there you can hit to guide me. It'll talk about the different filing status rules, and you can determine which one you would fall into. Click next. Then they want your personal information, your name and social security number, spouse, name, social security number, occupation, and of course your address and contact information. Then they want to know what state returns you want to file. So let's say you work in one state and live in another, so you would put down the state you live in, let's say Illinois, and you would click here and you would say you're a resident. And there are part year or non-residents, but let's just say for this purpose you're fully a resident. And then let's say you work in another state. Let's say you work in Indiana and live in Illinois. So you click Indiana because you have to file an Indiana return, and you would put down a non-resident of Indiana because you don't live there. Now, if you lived half the year, if you put part of the year in Illinois and part of the year in Indiana, then you put part year on both of those. Part year in Illinois, part year in Indiana. But that's how that would work. And then you would talk about your spouse. Where does she live? What state? And if she works in another state, you put down if she worked in Indiana or Wisconsin or wherever state she worked in. You would just do the same for your spouse. And you click next. Here they want, IRS wants certain information. They want your phone number, daytime phone number, and they want the primary taxpayer's social security number, date of birth, and your occupation. Same thing with your spouse. Click next. Then they have some questions here that you could go through to see if they apply to you. For you and your spouse. If any of these apply to you, you would check the box. For example, if you're a full-time student, if you're disabled, if you could be claimed as a dependent by someone else. And then there are a few others there. I'm not going to go through all of them. And click next. Then they want to know about your dependents. So you see there's a button there that says add a dependent. And then put there on the name of the dependent here. So you would click add. And then you would put down their name, date of birth, social security number, last name, what the relationship is to you or maybe your son. There's a little drop down box that you click and you would pick out the one that pertains to your relationship. And so you hit there's drop down boxes here. Did a child live with you? Did they live with another person or is another? I'm not going to go into details of those, but it'll guide you through it. They want to know if they're a U.S. citizen and if this dependent has a social security number that's valid for employment purposes. See the little button here says guide me. If you're not sure about certain things, you can hit the guide me button and it'll take you to different questions that you might have to get answered. So you put down, then you put down the dependent's first name. Dependents that doesn't qualify as your dependent. However, you may be able to claim other credits. For example, let's say you're divorced and your husband claims the child and the child lives with you. You could still claim the dependent. You can't. You'll claim the child for earned income credit. The father could get the child tax credit. You can get the earned income credit. So you can tell, even though the dependent is not being claimed by you, you're dependent. Someone else is claiming them. So I guess you would put their name there and social security number. So whenever you have to add a dependent, tell us about your dependents. Click Add Dependent, and then we did. I think I went through this already. Where you put all their information. Okay. So this is a good idea if you got to this point if you want to save the return. I'm not going to save this, but you probably want to click yes after you've gotten that far. So then they go to your income. You can see here you got the personal information done. Next step is the income. And they go through your wages, what other kind of income you may have. These are the type of income they're going to ask you for as you go through. The buttons here, you click next. They want you to upgrade here, just say no thanks. Continue. Alright, so if you have wages from a job, you would check that off. If you have state refund, local refunds that you got last year, unemployment, comp, interest, income, and dividends. So you would check those boxes if any of those pertain to you. Then they have business activities. Did you own your own business? Were you self-employed? Did you have real estate rental properties that you rented? Did you have a partnership or a corporation that you had income from? Did you get a K-1? Then they have, if you have a farming business or royalties, sometimes you got to get a 1099 for royalties from investments. So you would go through this and check off whatever pertains to you. Once again, this is under the income section. We already did the personal information. Click next. Then I'm going to ask you about investments. If you have any investments like sales, stock, if you have any cryptocurrency, employer stock transaction. Most of these people, most average people don't have these estate or trust income or loss or Section 1256. You might have stocks and bonds that you had, mutual funds. And if you have Bitcoin, you might have something there. But I think most of these others, most people will not even have. Go next. They're asking you if you had a capital loss carryover. That assumes that you had losses in stock investments. As you know, you're limited to $3,000 a year. So if you had $10,000 in losses last year, you took 3. You would have $7,000 you could carry forward. If you had that, you would say yes. So we're going to say no in this case. Choose any that applies to you. Other income, like if you have retirement plan income that you took out of your IRA or your retirement 401k, you got a 1099-R, you would check the box. If you took anything out of an annuity or life insurance, you check that box if you got a 1099. Did you have Social Security income? You would check that box. You may check all of these boxes, or you may not check any of them. Qualified disaster distributions, most people probably would not have that. I wouldn't even worry about it. Then they want to know if you had any property transactions. Did you sell your main home? Any like-kind changes? I'm not going to go through all these. Most of these, they relate to business. And most average 1040 filers don't have this type of transactions, like-kind transactions, Sale of business property or investment property. So we're going to skip that. They want to know what other income you received. Did you get any 1099Ks? Any 1099 NECs? Or any 1099 miscellaneous income? Jury duty. So if anything replies to you, you just check it off. Gambling income. Did you have any winnings in gambling? As you know, you have to report your gambling income. Gambling losses are only deductible to the extent of winnings. However, if you don't itemize, if you don't have enough to itemize, then you're not going to get any deduction for gambling losses. And then they have other income they're going to go through. I'm not going to go through all these. So you could check off whatever pertains to you. Did you have any cryptocurrency? They want to know. You would click yes or no. Digital asset transactions. Most people probably don't have that. I guess we want me to see it. I'll say no. Final income items. Most people probably won't have any of these. But if you did, you would enter it on those lines. If you had a net operating loss carried forward, or gambling income, there you go. That would go on that second line there. You might have got a W2G. And then you would just check off, put in the amounts if you have any of those from any business activities, not for profit, rental, or residential property. Most people don't have any of this. The average person. You might have gambling income. Medicare waiver program, then this is, I'm not going to go through that. All right, here you go. Here's your taxable income. So, if you had wages, you'd go to for wages. And here, what you can do is you can import it from your employer. Or you could download your W-2s in a PDF file. So you would upload it, you would download it into a PDF, then you would upload it into your program. So once you, and then it would automatically put the amounts on the tax return, whatever your W-2s are. So if you scan them into a PDF file, and you want to upload it, you don't have to enter all that information. Or you can import it from your employer. Or you can take a picture with the phone. Or you can enter it manually. So these are all the options you have for entering your W-2s. Okay. We went through this already. It's taking us back to what we were talking about. Now they want to know if you have any foreign accounts. Any foreign bank accounts. Did you have any of these in 2023? We're saying no here. All right, so we already went through this about gambling losses and all. So if you had a state or local refund, like here's what our W-2s. You go to the W-2, enter the information, or download it. Sales, state and local tax refunds. If you got any, you would go there and enter the information. Unemployment compensation, the same thing. Interest, you go. Let's say you have bank interest. You go to the form. So you would enter it manually, or you could import it from a 1099 interest. So you could, once again, you could probably scan it in a PDF and then upload it or import it, whatever. So interest, income, dividends, the same thing. You could go to, it says learn more about dividends, but I keep going back to where I was. So there you are. This is where you would enter amounts of other income, such as gambling income and K1 income that you may have received. If you had an IRA distribution, if you took money out of your IRA, you go there and you would click there to enter the information for any IRA distributions. If you receive Social Security, if you're retired or whatever, or disability, you go to Social Security, alimony or other income. So it links to the forms that you need to enter the information. They're talking about adjustments here. The adjustments to your income. So if you had student loan interest, or if you had a teacher's expense, you could take a deduction, alimony payments. Let's go to the next. Let's see. They ask you these questions, and then you would check off anyone that pertains to you. Did you give student loan? Did you pay student loan interest? Did you have job-related moving expenses? Did you pay alimony? I'm not going to go through all these. Here's miscellaneous items. Did you have jury duty? A lot of this stuff doesn't even pertain to most people, but you would enter it there. Then your adjustments to your income. If you have self-employment insurance, health insurance that you paid, self-employment tax, that's going to calculate automatically. They explain it to you there. Did you put money into an IRA? You enter it there. Educator expenses, you go to the form. So you go to wherever would pertain to you if you had any of those items. And if you need an explanation, you hit explain them out. Moving expenses, alimony paid, early withdrawal penalties. Next, they go to the itemized deductions. The big itemized deductions people will have would be real estate taxes, home mortgage interest, and maybe medical expenses and donations, contributions. So it asks you, did you have a mortgage that you paid interest on? You go through all that. Did you pay property taxes? Did you pay any personal property taxes? Do you have charitable donations? So you would go through all the medical deductions. So I would enter them all in there, whatever you had, because the program will calculate what you're entitled to. And it'll give you the greater of the mortgage, the itemized deductions. Here's they ask you about your charitable donations. Did you or your spouse make any donations? Click yes or no. So if you click yes, then they'll ask you, what is it that you gave? Did you have no money? Did you have items? Goodwill. State taxes you may have paid. Did you have any additional deductions that you paid in 2023? So you could go through those and put the amounts in there. All the deductions, same thing. So once you enter all your itemized deductions, it'll determine whether or not you could go itemized or standard. They'll give you the greater of the two. But I would enter them all in there anyway, just to play it safe. Because the property taxes, for example, once you enter it in there, it'll go on a state return. Illinois allows a deduction for state property taxes up to $10,000 on the federal, but you could take a credit on the state of Illinois also. So, even though you didn't itemize or didn't take it, it'll take the property tax and carry it to the state. There we are with deductions. Credits. You can go through these, excuse me, and then you just go to the form. If you have any of these, like if you had dependent care expenses, if you had education expenses, if you have earned income credit, child tax credit, I'm not going to go through those. Child tax credit in most cases is if a child lives with you, you claim as a dependent, and they are under the age of 17. That's for child tax credit. Earned income credit is based on your earnings, and if you're below a certain amount, you would get extra, what they call earned income tax credit. They give you credit towards your taxes. They have a savers credit. So if you want to know what that's about, you go to and find out what are you talking about. And then if you have it, you can enter it and see if you get any of it, if you qualify. So, and they have taxes. You would go to whatever pertains to you there. There's miscellaneous items. If you have injured spouse or things like that, if you need more information, you would just go to and try to have it explained to you. I'm not going to go into all that. I'm just showing you how this program works when you want to enter the information. How to enter the information. If you need to go to previous screen, you hit previous screen. So once you got that all entered, then you would go to the state return. It says, please enter file. I'm not going to do that right now, so we'll go over the state return some other time in another video. So there you have it. You have your menu up here where it says welcome. And then getting started, you click there. You can import information. Then you go to the federal, where you enter your personal information, your income, adjustments, deductions, credits and taxes, and so on. So that's about it for this video. I may go into another video where I actually go through and do a return. That's it for now.